Hello, everyone, and welcome to Unit 1 of our education series, Stock Investing 101. In this series, our intent is to help you understand the fundamentals of stock investing and provide you with the knowledge to make informed investment decisions. Today, for this lesson, we have 4 objectives. First, why it's important to learn stock investing. Second, how can financial education help you avoid costly mistakes? Third, what is the difference between a speculator and an investor? And fourth is, why should we stay away from speculation? So without any further ado, let's get started. Have you ever wondered how the world's most successful investors, like Warren Buffett and Peter Lynch, built their fortunes? Stock investing is one of the most powerful ways to build wealth over the long term, but it can also be risky if you don't have a solid understanding of the fundamentals. By learning about stock investing, you'll be able to identify good investment opportunities. You will also understand how market trends and economic conditions can impact your investments. Did you know, studies have revealed that 80% of investors lose money in the stock market? Shocking, right? But here's the thing, it's not because the stock market is some kind of unsolvable mystery. No, it's because most people don't take the time to understand how it works. They rush in, make poor decisions, invest in the wrong companies, and end up selling their stocks at the worst possible moment. But what if you could be different? What if you could be part of the elite few who actually make money in the stock market? The key is financial education. By learning about how the stock market works, you can avoid common pitfalls and choose the right stocks to grow your wealth. You don't have to be a financial genius to do it. You can start by reading books, taking courses, or speaking to a financial advisor. So why not start today and see where it takes you? In the second part of this video, let's discuss what is the difference between a speculator and an investor. Before we start investing our money, it's very important to understand the difference between a speculator and an investor. A speculator is someone who invests in stocks with the goal of making quick profits based on market rumors or tips. They often take on high levels of risk and may not have a long-term investment strategy. And on the other hand, an investor is someone who invests in stocks with a long-term focus and a solid understanding of investing fundamentals. Let's understand this with an example of 2 friends. Imagine the fate of 2 friends, Kevin and George, who started investing at the same time with an equal amount of money, but chose different investing strategies. George, who understood the value of financial literacy, invested a regular portion of his monthly income in companies with a strong business model, a solid financial position, and a track record of generating returns. He put money into a diversified portfolio with a long-term focus. Despite a few kickbacks, he knew his risk tolerance, remained invested, and earned significant stock returns over time. On the other hand, Kevin adopted a speculative approach, seeking quick returns based on market rumors and tips. He became overly excited about the potential of a few random stocks that his friends suggested, and invested all his savings. Unfortunately, the market experiences a correction, causing his stock price to drop. He panicked and sold his portfolio, leading to a significant loss in a short period of time. He repeated this behavior a few times until he hated the stock market. George's approach as an investor has long-term planning, diversified portfolio, calculated risk tolerance, compounding. Kevin's approach has speculation, greed for quick returns, believed in market rumors and tips, gets panicked and overly excited. Although Kevin is a very smart man, but he loses all his money due to speculation. Our goal for this series is based on this quote from Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Therefore, we should avoid speculation. In this lesson, we covered these 4 objectives. First, why it's essential to learn stock investing. Because we do not want to lose our money. Second was, how can financial education help us avoid costly mistakes? Because it provides us with knowledge, skill, and the mindset to manage our investment effectively. Third, we learned the difference between a speculator and an investor. And the fourth was, Why should we avoid speculation? In the upcoming chapters of this series, we'll dive deep into various investment concepts. We hope that by the end of this series, you'll have a good understanding of stock investing and be on your way to becoming a successful investor. Thank you for watching. Let us know in the comments why you think investing is important. If you found the video helpful, please give it a thumbs up and subscribe to our channel for more valuable content on investing.